Good afternoon, traders, and welcome to today's daily market review. It is Thursday, the 5th of May, and today we're going to have a quick review of Standard Chartered, the stock which we reviewed last week, Wednesday, and also we're going to have a look at what's going on with both Rio Tinto and Anglo American. So last week, Wednesday, for those of you who recall, you'll remember that we were trading in and around 563.30 on Standard Charter, and I had identified a harmonic back pattern, which is a high probability reversal pattern, and the price action of the market had entered into our first Fibonacci price zone. Our first Fibonacci price zone was 554.85 at 565.93, and the second of which was 596.21 at 608.38. We were looking for a time window between the 27th and the 29th of April. Now, since then, we've had a move to the downside, as predicted. The market's currently trading, as you can see, it's moving now at 507, between 507 and 506. So we're looking at a move to the downside of between 59 to 60, 61 points. However, the market's moving at the moment. Interesting thing to notice is the time window. Now, time is a form of analysis which many traders neglect. If used correctly, especially in combination with Fibonacci ratios, they can be highly accurate. In this example, again, we was looking at a time window between the 27th and the 29th. And if we go down to the hourly chart, which is the chart that we generally execute most of our trades on, we were looking for a move below 549.60 before we were looking to enter the trade to the downside. Now, what's interesting to notice is that we had the Friday, which was on the 29th, which was the day of the last day of our time window, and on the 3rd of May, we have this big gap to the downside. So as with our other examples in Rio Tinto, time, if you know how to use it correctly, can be a great contributing factor in combination with the rest of your analysis. So Standard Chartered at the moment has come off the zone. I still expect some move to the downside. For those of you who managed to get into the trade, you should be trading your stops and keeping an eye out for any type of reversal to the upside. In regards to the previous two reviews, the second of which was Anglo American. Now, in the last review of Standard Chartered, we went back and took a look at the price. The market had dropped to 154. The lowest point was 658. This was 1 week ago. Since this time, the market has fallen around another 30 odd points. So we're around about 627 has been the lowest point since the move from zone 1. So around about 185 points. I know a few of our followers are still in the market at the moment. In regards to Rio Tinto, exactly the same. We've had a bit more of an aggressive move to the downside. The last review of Standard Chartered, we was down around 249 points at around 2169. The market is continuing to come off, guys. So we're looking at a low point today of around 339 points. So in all, over the last 3 reviews, you could have accumulated anywhere between 500 to 580 points. I know some of the followers, depending on their entry criteria, are up around 3 to 400. So it's not bad going. In regards to Rio and Anglo American, I would be very careful now. I'm not going to go into a great detail in terms of Elliott wave analysis and price action. But if you remember from the first reviews of each of them, the expected, or the better zone was 249.99.70 to 25.50 for Rio, and for Anglo American it was 862.87 at 890.22. I do believe there's going to be a reversal to the upside, and the second zones which have been identified are going to be hit. So if you haven't watched the reviews on those, then by all means go back and take a look, because there may well be a more aggressive move to the downside once the second zones have been penetrated. Okay, so back to Standard Chartered. Again, guys, we're down 59.6. We're looking for profits just below the first swing point, so around 425.65. But again, for those of you who trail your stops, I would trail them closely and look for any type of reversal to the upside, and then you maybe want to break even, or even take some of your position off of the table. So last three reviews are going well, and we will be doing a review on Friday. So look out for the next review, and look forward to seeing you then.